go live. Go live. All right, hello traders. How are you? I hope everybody had a great weekend. We are going to have a great um, webinar right now. We're going to look at how to trade divergence. I'm just making sure that everybody can hear us. All right, hello traders. How are you? Right now, everybody had a great weekend. We are going to have a great. Um, can everybody hear me? If you can hear me, please type yes on the chat. Ensure that everybody can hear us. All right, right now. How are you? Right now. Everybody had a great weekend. All right, so we are live. We're going to start this webinar right now. I'm just setting up my charts and waiting for everybody else to join me. Yeah, we're going to start right now. Okay, so, all right, so we are live. Let me just share the link to the free webinar to the groups. Okay, so if everybody can hear me, we are going to start the webinar right now. We're going to talk about divergence, and we are going to look at some examples, and then we are going to look for zones where we can actually trade divergence um, at the open, right? This is XRP, this is a Ripple, but we're going to go and look at the major currency pairs, and we are going to use the RSI, right? The Relative Strength Index. If you have any questions, just post it on the chat. If you have any questions, just post it on the chat. I will be more than happy to respond to anything. And yeah, we will begin in 1 minute. I'm just giving some time for everybody else to join us. All right, I'm back. So let's start. Let's see how many people are watching right now. We have 11 people watching. And we're going to talk about divergence, right? Divergence is when price is making higher highs or higher lows, higher highs or lower highs, and the oscillator that we are going to use is making the opposite, right? Now, why is divergence so important? Well, divergence is important because it shows that the current trend is exhausting. So we might get into a reversal, right? And because the market is about to open, right, in I reckon in about 30 minutes or so, we are going to look for spots where we can trade some divergences, right? This is going to be more of technical analysis and looking for spots that we can trade rather than a full-on educational webinar. I think that that is something that is going to be profitable for everybody, right? So we are going to use the relative strength index. We can use all kinds of oscillators. They to look for divergences, but my preferred one is the RSI. Right, and we have to go ahead and look at the RSI in the, and I like to use some slow RSIs, right? Why? Because well, the reason is that if you use the 14 period the 14 period RSI, we are going to get a lot of highs and a lot of lows, right? We are going to get a lot of chop, and I want to filter that out. And by doing that is I go to a higher length on the RSI, right? We can use the 27, the 103, etc. But if we use the 103, right, we are going to get a very flat relative strength index. So so we are going to use the 25, and we're going to move forward, right? So the relative strength index, or the RSI, or any oscillator for that matter, is what the oscillator gives you is the strength of the current trend, right? And when you look at the oscillator, and the oscillator continues to make higher highs in a bullish trend, and price, of course, continues to make higher high. This means that we might actually be still be inside of a very strong trend. So we shouldn't look for tops on that trend and try to short that the market that we're looking at, right? Now let's have a look at this. The New Zealand dollar versus the where the Kiwi USD is made a lower high and a higher high, and the oscillator is still making higher highs, right? Kind of a flat high here, if you ask me, and this could be an actual sign of a reversal in play. Now, if you watch our video on Friday, you know that we are looking to get long on the New Zealand dollar versus the US dollar, and our preferred zone to get long is right here, right? But if this is in fact signs of an exhaustion in this bullish trend, what we are going to be looking for is maybe a break and a retest of this level for us to get short. Now, when you look for divergences in a price action with the oscillator, in this case the RSI, I suggest you go to the higher time frames, right? I mean, it depends on where you you trade, right? But my reasoning is that the higher you go on time frames, the stronger the divergence will be. Because you can find divergences on the 50-minute chart, right? Of course, you can find divergences on from the 50-minute chart, and they will work. Just look at this one right here. Just look at the last one. Price made higher highs, and the oscillator was making higher lows. Lower highs, I'm sorry. Yeah, price was making higher highs, the oscillator was making, well, in this case, kind of flat lows, flat highs. And then when price broke with the lows, we had somewhat of a reversal at the top, right? This was at the close of last Friday, so we didn't get a follow through on that one. But we can go ahead and look for other divergences, and we're going to look for today we're also going to look for hidden divergences if we can find them. But right here at the bottom of the move this is something that we're going to be looking for on the New Zealand dollar versus the US dollar at the open, and that would be right here. You can see that we clearly are making this can be considered a lower low, right, or a flat low. In any case, it really doesn't matter because the oscillator clearly made a higher low, right? So this was a sign of exhaustion in price action, or exhaustion of the current trend, right, and a reversal when price actually broke to the upside on that reversal pattern. So yes, divergences can be found on the higher time frames and on the lower time frames, right? And they will work, but my way to use divergences really is within a trading system, right? I have my trading rules, I have my trading system, and I use divergence just to justify my current trade idea or my current position, right? If I find divergence in the trade idea that I want to trade, right, it's even stronger, right? That gives it a plus. So I will take it anytime if I find divergence, right? And if I have a signal or a trade idea that doesn't have divergence, I'm always going to be taking the one that has divergence, right? Why? Because it simply shows me that price is exhausting, right? The current strength of price is exhausting, and the probability of price going in my direction is way higher, right? And as I showed you right here, it does work on the lower time frames. But let's go back to the higher time frames. For example, the 4-hour chart, right? And this is the tricky part of divergence, right? That, for example, here on the Kiwi USD, from this time in price action right here around November 11th, this is where the divergence started, really on the Kiwi USD, and it really hasn't. Look at this, and it really hasn't reversed. Right here we had somewhat of a fake out of this current bullish structure, but really we're still inside of that bullish structure. And that's the thing about divergence, right? You cannot trade it blindly. You can't trade a system just based on divergence, because you are going to burn money every single time that you do so. Why? Because divergence, markets can remain, or the oscillators can remain divergent for a long time, right? So you need some kind of a trigger before looking into divergence, and that is your trading system, and in this case it's mine, right? This is just an example of how divergence can actually be great for your trading, or it can be disastrous for your trading. And the reason is that If you are basing your trading decisions solely on divergence, you are going to burn money. The reason is because you will actually be trying to pick tops in a uptrend and bottoms in a downtrend, and that, my friends, is something that you do not want to be doing, right? Let's go back to the 15-minute chart. This example, right? This example was a great example because we are trading inside of a range, and we are actually trying to get in, or we were actually trying to get in on the current trend, which is the bullish one, right, on the higher time frames. So if this is clear for everybody, I think we can move forward. And let me see if we have any questions. What is divergence? Anyone know? Can you see the pound yen? Yes, I can see the pound yen. What is divergence? I think I already. The RSI setting is the 25, mate. Right? The RSI setting is 25. Right here, you can see. And we use the closing price, right? Yeah, we can have a look at the pound versus the yen. I know that that is a market that everybody wants or everybody likes to trade. But why don't we have a look at gold first, right, mate? Yeah, the reason I want to look at gold is because gold has lost a lot of strength, or this bullish move in gold has lost a lot of strength this past week. And this week we have a lot of economic data that's going to be dumped into the market. So I reckon we need to look at some markets that will react a lot to this news, right? Gold is one of them, and yes, gold is I mean, the last time that I saw gold trade this cleanly inside of structures was a long time ago, right? And if you notice here, gold is printing somewhat of a head and shoulders pattern right at the top of this bullish move that we saw last week, right? So, having said that, we are sitting inside of an immediate bearish structure, a bullish structure, I'm sorry. So let's add that indicator, the RSI, on the 25. Oops, I'm sorry. I think it was already added. Right here. Yeah, this is the RSI. So we have clear divergence at the top, right? That was a great way to understand or to know that this trend might be exhausting at the top and at the key level. This is why divergence is so fun, right? Because it gives you a clear view of where price might go, right? And in this case, the bearish divergence, was really, really clear. Could you add time frames to look at on the signal entries? Time frames on the, yeah, sure. I mean, that's not a problem, but I mean, I don't see the reason to, but yeah, I mean, we can try that. So let's continue, mates. Right here, gold. We had a very strong bearish divergence in gold, and we were retesting a previous key level right here. So not only we were retesting the previous key level, but we were also printing a reversal pattern at the top, and 1 plus 2 plus 3 plus 4, and this was a slam dunk short in gold right here. But now we have to look at what's going on right now. And what I see here is some hidden divergence. Now, hidden divergence on the bullish side is when the price is making higher lows, in this case flat lows, right? And the oscillator is making lower lows. This is a sign that we are still inside of a bullish trend, right? And in this case, right here, you can see that from this low to this high, well, it is a flat, kind of a higher low. But on the oscillator, it's clear that we are making a lower low. So this is bullish, right? This is bullish for gold. I'm not saying that gold is going to continue its up move, but just based on the RSI and just based on divergence itself, it points at a bullish breakout of the midterm bearish structure, which is this one right here. This bearish structure. Actually, I'm just going to change the colors of the structure so you can better understand what I'm talking about. I'll make this one blue. Yeah. Oh, so the immediate bearish structure is blue, right? Right here. The midterm bearish structure is blue. And the immediate structure is white, which is the bullish structure, this channel right here. So just by looking at divergence, everything points out at a bullish continuation, right? Now let's just look at technicals. This level is super strong, right? The 1826.25 level is where bulls are positioned, and you can see the rejections once, twice, big rejections, 4 times, right? 4 times bears tried to break through this level and were not able to, right? So but just by looking at price action itself, we know that this is a strong level, and this is where buyers are positioned, and this is the level that buyers are protecting. That doesn't mean that this level is not going to break. This is just what we are looking at. And we have bullish hidden divergence. So that means that it's pretty plausible that we are going to go higher. I know that I said that we are trading, or that we were trading on a bearish divergence at these levels, but if you look at price action right now, that divergence is gone. That divergence was traded, and bears were unable to break lower. So now we are looking at the possibility of buying gold, and the levels that we are going to look at are the 1850, this one right here, and for that, let's go to the lower time frames, right? 30-minute chart or so. It's not that we're going to trade the 30-minute chart, but it's a I mean, we're going to have a better look at those levels on the lower time frames, right? So the thing about this is that if we go higher, right, and retest this level, I don't think I'm going to buy gold just yet. I'm going to wait for this. This is what I want. This is what I really want. I want price to start compressing with this level of resistance and the channel's resistance to form a triangle formation, which is a continuation pattern, so that I have a great risk to reward ratio for the next targets, which are about the 1875. That's my plan, right? You can do I mean, if you trade differently and you can find a different entry in gold, that's fine with me, but that's my plan, right? And everything looking at also everything looking very divergent to the upside on the lower time frames, in the sense that we have flat lows and higher lows printed on the oscillator on the lower time frame. So we immediately it's looking quite bullish, this market. There's no setup for me right now, but it's looking bullish. So that's how I use divergence, right? I mean, yes, I do use it for trading, but more so but more for a directional tool in the market, right? Now let's see if we have any questions. Nope, everything is good. Let's continue, shall we? So we were saying that you want me to look at the pound yen. Let's have a look at the pound yen, right? GBP pairs. pound yen right here. Cool. All right, so let's delete everything, right? Remove joins. And the pound yen, personally speaking, mate, I'm looking to sell this one. Um, the reason is, let's start by looking at the higher time frames and then let's move lower. And I'm going to explain my thought process on everything so you can understand why I'm looking to sell this, right? So, sometimes I'm not going to use divergence on my rationales, but that's completely fine, right? So the reason that I'm looking to sell this is this now, or this one right here. We topped. This was when last week, I reckon. Yeah, 11. No, this was on the November 11th or so. It doesn't matter. But we topped, or we were trading inside of this range for a while now. Actually, for for about a month, we were trading inside of this range. And we just broke with the range and retested that range. So that to me, mate, is very, very bearish. And the reason that I also like it is because of how good this risk versus reward ratio is going to be. For that, let's go to the hourly time frame, right? As you can see, right here, we are retesting these previous lows, this previous daily zone, let's call it, right? And the next target would be the 134.60 or so, with a great risk to reward ratio. Right now, I don't have an entry, right? There's no setup yet. I have to wait and see where the market is going to open. Remember that the pound is kind of volatile, and I haven't looked at my news terminal just yet to see what has happened with Brexit this week. Maybe you guys can tell me. But let's assume that we are going to be taking this is a bullish one. Hold on. Let's assume that we are going to be taking a mid-risk. This is going to give us. This is way too. I mean, this stop loss is way too wide. But the reason that actually I'm not gonna put it there because it's way too wide. I'm gonna put it above this week high. Now let me just go ahead and do this. I'm gonna put my stop loss above this week high just because this is where we got some rejection. And if we go to the 15-minute chart, yeah, I mean this is where that stop loss should be. The entry should be below these lows. Stop loss should be here, and if we're looking at this as targets, we are getting a 1 to 5 risk to reward ratio on a short position on the pound versus the yen. Not only that, mate, but we are printing what seems to be a continuation pattern on the pound. Jesus. On the pound versus the yen right here, right? And now let's look at some divergences. If we have some, and we are printing from, have a look at this, from this point in time right here, we are printing a bearish hidden divergence, right? Bearish hidden divergence is when price is making lower highs and the oscillator makes higher highs, right? So everything points out at a nice continuation of the pound versus the yen, and I will be sending that signal to the VIP channel. If you're not part of the VIP channel, there's a link below this video. I think it's this one right here. No, there's not a link. I'll give you guys I'll give you guys a link in a few. Let me see. Sorry for the random questions above. The reasons for having a time frame on the entry signal y'all give out would benefit the people using them to also to check for confirmation ourselves. For example, I'm in a euro yen sell trade that you guys signal, and it has created a big impulse up. And okay, higher move. All right, I understand. Yeah, I mean, if it helps you out, mate, of course that we will be on that. Now, So that is the pound versus the yen. Very interesting, actually, and I'm gonna put this um, on my watch list right now because this is something that I am going to be doing. GBP, Japanese yen, at the open. We're going to look for sales on the pound yen. Right now, that's a very nice spot on the pound versus the yen. Let's go to the hourly time frame. And yeah, I mean, everything's pointing out, close very bearish too. Everything is pointing out at a continuation. Now, the reason that I am going to wait a little for the uh, I'm going to wait a little in order to sell the pound versus the yen is because of this, right? Uh, I mean, the pound versus the yen did reject the previous lows, right? And the actual level that I will be looking for sales is the 138 to 137.90. So I do need a little bit of an impulse to the upside and the rejection here, right? And of course, I'm going to be very, very uh, fast to close if I see another rejection to the upside at these levels. But in any other case, it's looking very good, right? Also, I mean, don't get caught using divergence for everything, right? I mean, use it. I mean, the way that you have to use it is just by looking at the direction of the market and yeah, I mean, looking for justifications on that entry, right? Let's have a look at another market. Let's see if some GBP USD. Is Fibonacci useful with RSI? Listen, mate. Fibonacci. I mean, I believe in Fibonacci. Yeah, and it is actually. And why don't we actually look for an example right now? Maybe on the pound versus the yen, we can look for on the pound USD. We can look for an example. But yes, actually, and well, let me explain to you why. Right? Let's assume that price is trending to the upside, and price is at this moment in time, right? And you wanna enter long because you are looking at price moving to the upside, right? So you grab your Fibonacci retracement tools, and I don't know the ones that you use, but I use the golden zone, 50 to 61.8. And what do you know? The 50 to 61.8 confluences perfectly with the previous high. So yes, this is a great zone to enter long right here. And if you have your RSI diverging or making a bullish divergence, in the sense that a bullish divergence is when price is making higher lows, I'm sorry, and the oscillator is making lower lows. So if you have your oscillator at the bottom of your chart, right here, making lower lows, and price prints a higher low, you have a very strong bullish divergence. And that, my friend, gives you an extra justification of how strong that setup really is. Right? So yeah, I'm a very, very, very big fan of using divergence with Fibonacci retracement. I hope that helps. I hope that explains or that answers your question. Right? So the pound versus the US dollar. Let's go to the higher time frames. If you like this video, also give us a thumbs up and or leave a comment or whatever. That helps us out with these free contents. So let's go to the daily chart. Actually, the daily chart on the pound versus the US dollar looking extremely bullish. But again, let's pop up the RSI. I do have it here. This is not the RSI. This is the Williams percent range on the 103. You can see the Williams percent range on the 103, but it's basically the same. If you don't know what the Williams percent range is, you should be using the RSI. But right now we're going to use the Williams percent range. And just look at this. From this high to this high, we have higher highs, right? And the oscillator is printing heavy lower highs. So yes, big bullish, big bearish divergence on the pound versus the US dollar. And I'll show you on the RSI too. Actually, I'll keep using the RSI. That's fine. Yeah. So you see basically the same. This is the 25 RSI, I reckon. Let me see. No, this is 14. Yeah, because we are on a daily, we should be using, the 14 or the 25. With the higher you go on time frames, the lower you need to go with the RSI. Because if you go higher, if you go too high, let's say the 32 on the daily, you are going to get some very flat RSI. So on the daily, let's use the 14 period moving, the 14 period RSI. And yeah, printing a very strong bearish divergence on the daily. And if we go to the 4-hour chart, if we go to the 4-hour chart, now we need to go to the 25. Now it's I know it's not the best, but that's what you need to do. So on the pound versus the US dollar, I'm looking the same. I'm looking to sell this. Again, I don't know what has happened with Brexit Brexit. I'm sorry, this weekend, but I'll be going through my news terminal in a bit. Now, this is the level that I will be looking to sell the pound versus the US dollar. But it's clear. It's very clear why. This is the level that bulls were protecting, and last Friday we finally broke with it. And I'm looking at a push to the upside to sell this. Now, I'm sorry, we are in a bullish structure, right? But if you look at what has happened, the immediate bullish structure was broken with, right? Let's use another color, and let's clone this. It wasn't a very clear structure because of how volatile this market got last week. But in any case, this is a reversal to me. Now, the next levels that I will be looking at are these levels right here. Just because price might do this and then go and retest the current structure, but I'm looking at a break of that structure too, and a continuation to the 129. That's my plan on the GBP/USD. And as you can see, I do have notes even here. Let's see my notes. Only scenario sells at the retest of the 132.75 for a 5R. Pay attention to the 130.60, which is this one right here. Yeah, everything points out at a bearish continuation. Now, even more so if we get some US dollar strength this week, right? Thank you, boss. I appreciate you looking into it. No worries, mate. Of course. Now, if you want to receive the my signals, it's on the Learn to Trade swing trading signals package on the Learn to Trade website. So let's continue. Let's have a look. So we went to the pound versus the US dollar. Those are my thoughts on the pound versus the USD. I'm looking to sell and sell only. Right. Let's continue. The Aussie. I don't really trade the Aussie. The euro versus the USD bullish, but again, well, let's have a look at this. Same thing as the Kiwi dollar. I'm looking to buy into this massive, well, not massive, but very strong uptrend on the euro. If I see a clear rejection of the 126, I will be looking into buying for a break of the 120.60 for a possible break of the 122. Right, so because the euro is very strong at the moment, and the US dollar is kind of weak, very weak actually. So we're looking at a 145 pip move, yeah, or so. And yeah, that's a wrap up, people. Thank you for joining me, and I hope that this divergence. I mean, and if you just join us, I mean, just the same link will get you to the recording of this webinar, and I hope that this divergence thing that I just showed you help you out with your own personal trading and understanding mine too. If you receive the swing trading signals or the VIP swing trading signals, right? And I hope that you have a better look into my thought process on how I look for entries and exits actually. And I wish you again a great end of your weekend. And I'll see you guys tomorrow. Thank you for joining me. Goodbye.